As we step into this Saturday, November 29, 2025, assessing the wreckage and the opportunity left behind from yesterday's trading session, Datavault AI Inc., ticker symbol DVLT, is sitting at a critical juncture. The stock closed the week at exactly 2.03 USD, down 0.10 USD or roughly 4.69% for the day. While the market is currently closed for the weekend, the after-hours action saw a further slippage of 0.49%, bringing the theoretical opening mark to around 2.02 USD. If you are holding this stock or watching from the sidelines, you might see that red percentage and assume the sentiment has turned entirely bearish. It is easy to look at a 5% drop and assume the sellers have taken control. However, that assumption would be a mistake. What we are witnessing here is not a simple sell-off. It is a complex repricing event driven by one of the most aggressive capital restructuring moves we have seen in the microcap AI space this year. The surface-level narrative is that DVLT is sliding. The deeper reality is that this company is fundamentally altering its balance sheet mechanics in real time, effectively transforming itself from a pure-play data monetization firm into a Bitcoin-backed asset holding company, and the market is struggling to calculate the correct valuation for this new hybrid model. When you look at the intraday chart provided, the volatility tells a very specific story about investor psychology versus institutional execution. The stock opened at 2.11 USD, slightly gapped up, and immediately pushed to a high of 2.24 USD by 10 a.m. That morning spike was likely driven by retail traders reacting to the headlines regarding the Silex deal and the Bitcoin acquisition. It has all the hallmarks of a bull trap, a rapid ascent designed to lure in liquidity before the rug is pulled. And pulled it was. By noon, the price had collapsed from that 2.24 USD high down to a crushing low of 1.94 USD. That is a 30-cent swing in 2 hours, which on a $2 stock represents massive volatility. But here is where it gets interesting. It did not stay at 1.94 USD. The bounce back to close above the psychological $2 level at 2.03 USD suggests that there is a rigid layer of support sitting right at that $2 mark. Someone or some entity stepped in to absorb the selling pressure at the lows. This tension between the morning euphoria and the midday capitulation is exactly where the opportunity lies for astute observers. The common ground here, what most retail investors are chatting about on forums this weekend, is the fear of dilution. Everyone knows that when a company issues warrants, the share count goes up and the value of existing shares gets watered down. That's the textbook expectation. Investors see the recent filings regarding the pre-funded warrants for over 260 million shares and they panic. They assume the stock is destined for the sub-dollar range because the supply of shares is about to explode. This is the prevailing sentiment. DVLT is a dilution machine. However, the reality of the situation forces us to look at the other side of the ledger. Yes, there is dilution, but what did they get for it? They did not just raise cash to burn on operating expenses, they raised roughly 1,237 Bitcoin. This effectively pegs a portion of the company's book value to the price of Bitcoin. If you believe we are in a crypto supercycle, then Datavault is no longer just an earnings story, it is a net asset value play. The contrarian take here is that the market is over-discounting the dilution and underpricing the Bitcoin treasury assets. The drop to 2.03 USD might just be the market miscalculating the new floor price based on the current value of their digital holdings. Let's analyze the specific price action from Friday more closely because it offers clues for next week. The drop from 2.24 USD to 1.94 USD was not a straight line, it was a cascading liquidation. This usually happens when stop-loss orders are clustered together. Traders who bought the breakout earlier in the week likely set their stops just below 2.10 USD and 2.00 USD. Once the price cracked 2.10 USD, it triggered a chain reaction of automated selling that flushed the price down to 1.94 USD. The fact that it snapped back to 2.03 USD indicates that the smart money had buy limit orders waiting in that sub-$2 zone. They waited for the retail capitulation to hand them cheap shares. This phenomenon is critical to understand. The volume profile on the recovery from 1.94 USD to 2.03 USD was steady, implying accumulation rather than frantic covering. This stability heading into the close, despite the overall red day, is a subtle signal of strength. It suggests that the $2 level is being defended vigorously. Now we need to address the elephant in the room that is driving a lot of anxiety: short selling. In the world of small-cap tech stocks, short sellers are predatory, and DVLT is currently flashing several signals that demand your attention. With a drop of nearly 5% on a Friday, you can be certain that short interest is active. When a stock has a high float and recent dilution news, short sellers smell blood. They're betting that the millions of new shares from the warrant issuance will hit the market and crush the price. You need to be watching the borrow fee rates on your brokerage platform. If the cost to borrow DVLT shares starts spiking over 20 or 30%, it means the pool of available shares to short is drying up. This can lead to a volatile situation known as a short squeeze, but don't bet the farm on it just yet. The short thesis relies on the idea that the company will continue to burn cash and dilute shareholders. However, there is an actionable insight regarding short data that you can check yourself. Look for the Regulation SHO threshold list for NASDAQ. If DVLT appears on this list, it means there are significant fails to deliver (FTDs). An FTD happens when a short seller initiates a position but fails to deliver the shares within the settlement time, T+1. If these FTDs stack up, it creates forced buying pressure later, as brokers are legally required to close out those positions. Right now, with the volume we're seeing, it is highly probable that naked shorting, selling shares that don't exist, is playing a role in this volatility. If you are long this stock, you must exercise patience. Don't chase the morning spikes. As we saw Friday, the morning rip to 2.24 USD was a trap. The actionable strategy here is to watch the $1.95 to $2 zone. If that level holds on Monday and Tuesday, it confirms a double bottom structure. If it breaks, the next technical support is significantly lower, likely around 1.75 USD. I want to pause here and get a sense of where you stand on this. Comment below how many shares of Datavault AI you currently hold, or if you're waiting for a lower entry price. Also, do you think the pivot to a Bitcoin treasury strategy is a brilliant move to hedge against inflation, or is it a desperate attempt to distract from the core business metrics? I want to read your thoughts on this strategy because it's becoming a trend among small-cap tech firms. Moving beyond the technicals, we have to talk about what Datavault AI actually does because the business model is shifting. Historically, Datavault has been positioned as a tech company focused on data monetization, credentialing, and what they call acoustic intelligence. They have patents related to data packet transmission and verified identity. Essentially, they aim to create a marketplace where data, whether it's personal user data or enterprise data sets, can be valued, tracked, and monetized securely. This is a massive addressable market as we move into the Web 3.0 era. Using the term in a technical sense. The idea is that in a world of AI-generated content, verifying the authenticity of data is valuable. However, the recent news cycle has overshadowed this core business with the massive deal involving Silex Holding Company. The Silex deal is the most significant development in the company's history. Closing the second tranche of this equity financing brought in roughly 1,237 Bitcoin. At current market rates for Bitcoin, this is a staggering amount of capital for a company of this size. But the cost was high, the issuance of a pre-funded warrant exercisable for over 260 million shares. This is why the stock is down. The market is trying to do the math. Does the value of the Bitcoin sitting on the balance sheet exceed the dilution impact of 260 million new shares? It's a tug of war between asset value and share count, and the market is struggling to calculate the correct valuation for this new hybrid model. The current stock price represents the market's attempt to find the new equilibrium. The stability at 2.03 USD suggests that there is a minimum floor price being created based on the Bitcoin holdings and the potential value of the RWA platform. Let's dig deeper into the real-world asset tokenization aspect, as this is likely the long-term play. The deal to tokenize copper, gold, and other minerals means Datavault is trying to build a digital ledger where physical commodities can be traded instantly and transparently. If they succeed, they become an infrastructure play for the future of global trade. However, these are complex international deals that take years to mature. The market, being impatient, is focused entirely on the immediate dilution and the daily price of Bitcoin. This disconnect is why the stock trades with such volatility. When Bitcoin rips, DVLT should theoretically rip. When Bitcoin dumps, DVLT will likely suffer. You're essentially trading a crypto proxy that also has an operating software business attached to it. Looking ahead to next week and the remainder of 2025, the future outlook for DVLT hinges on